Joe, you want to talk about yield and the implied mortgage rate.
Right. If you take a look at the resetting down lower of the yield curve, before I came over today, I saw a 10-year, which looks like it's going to stick below 0.7 on the day. I saw 0.69 on that, right? Mm-hmm. The 2 years below 0.5%. All right, you look at the 30-year. Okay, I looked on my terminal. It was 1.32. That implies, if I'm not mistaken, a 2.7% 30-year fixed rate. All right, if you don't see mortgage rates adjust downward, you're going to see a real strong period of financial repression out of the regulatory community. Because one of the concerns is, because the risk is now rising that the banks pull back on lending, we're hearing a little bit of this anecdotally. Can't see it yet in the systematic data, but if we begin to do that, it's time for the federal government to really get them to move.
But what leverage? We know that 30-year fixed rate mortgage right now at a record 3.2 something, 3.29. What leverage do I have as an individual to say to a big bank, hey, let's be honest, the spread you just talked about, you should be giving me 2.7. Which bank is going to give you 2.7, 2.8?
Well, it's not going to be one of the big banks. It's going to be the local banks, and that's who you want to go to, because they're going to try to be competitive in that way, because they know the local conditions better than, say, Bank of America or Wells Fargo.
Fifth Third in Ohio.
Yeah,
Okay.
PNC, all of the local
Even
lenders.
the credit unions.
That's right. Your credit union, that's a great place to go. This is going to be part of the ongoing narrative over the next month. Guarantee it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.